Hello, Anthony.
Hello, Claudine.
We're joined today by a very special guest, Bruce McGuire, founder and president of the Connecticut Hedge Fund Association, also the managing partner at Global Alpha Research. Welcome. Thank you for joining us today.
Thank you for having me. It's a pleasure.
Now, I think a lot of people would be surprised to know that Connecticut is the third largest of hedge funds in the world. Over 400 funds, I hear, managing over $750 billion.
That's correct. Yeah, we are the number 3 global center of this industry.
Who's 1 and 2?
New York and London.
Well,
I've heard of those places. I think I've been.
And I will tell you that when you only count the biggest firms, so the firms that manage $1 billion or more, then Connecticut jumps ahead of London. We're number 2 there.
Wow.
Okay,
Yeah, very surprising.
All right.
So we want to start quickly talking about a bill that was proposed could potentially affect Connecticut hedge funds. Now, the budget it may or may not be passed.
Yeah, so where we are now is that the Republican budget was passed, and it's went to the governor's desk. He has promised a veto. The budget as now does not include this tax that was considered to be imposed on investment management services. So it might come back because there could be a veto, and then somebody could say, okay, this is the thing that we need. And it's really such a monumentally bad idea that I think a lot of even Democrats in Fairfield County know this is a bad idea. Is that true?
Well, speaking as a Democrat from Fairfield County, I would say yes, that is true.
100% yes. I'll quickly tell you that the bill is, quote unquote, an act concerning the imposition of a surcharge on investment management services fees to provide tax parity. Proposed to tax hedge funds and other managed investments at 19%. Now, the other night you went to a meeting that Bruce was hosting. Yep. Were you both surprised to see protesters outside?
I had no idea, and I was waiting in the parking lot for Janine to show up, and I could hear this faint chant in the background, and I could hear it sounded like a drill sergeant. Someone was yelling something, and then there's a repeat. I was like, "What is that?" And I was thinking maybe it's people doing CrossFit. That was the first thing I thought of.
That's very Greenwich. Yes,
right. I was like, I don't know. They're doing CrossFit, and this is like the guru from around the country, and they probably paid a lot of money for this guy. That's my first thing I thought of. And I could hear him getting closer, and then I heard sort of the chants. I was like, oh, no, they're protesters. I'm like, wait, are they coming here? And I was like, I think they're coming here. And there was, I was waiting in there, and they're taking a picture of me, and that's all it took. And then that was a day.
You were like, oh, wait, they're protesting.
They were protesting billionaires, and that was a day Bruce and I became billionaires.
Exactly.
That was fantastic.
Were you surprised?
I was surprised, and maybe I shouldn't have been. Mm-hmm. I knew that there was going to be a vote taken that morning. Mm-hmm. I think that was the catalyst for some of the unions getting their people out on the streets in this last-ditch attempt to try to raise awareness of the budget process, the budget deficit, and really their attempts to try to find different pockets of wealth to tap into to try to make up that shortfall. But yep. I will tell you that we have been, our association has been in existence for over 12 years now, and we do 4 events just like that per year, and that's the first time we've ever had a group gathered outside the gates like that. So yes, in that sense, I was surprised.
Now, the bill would impose a surcharge on income derived from investment management services and would cover investors from all income levels. So, Bruce, who exactly does this impact? I was reading, is it everyone investing in hedge funds or just managers?
Well, I think it was aimed at certainly hedge fund managers and private equity managers. Mm-hmm. So I think if you look to the intent of that bill, it was aimed at closing what they call the carried interest loophole.
Don't get us started on the loophole.
Tax treatment of carried interest if you're talking private equity and performance fees in the hedge fund world. Where the tax treatment of those fees, are treated as long-term capital gains as opposed to ordinary income, and so, there's been this sense that that's not equitable, and that the federal government should fix that in the tax code. Right. And in this case, I think the sense is that the federal government isn't close to fixing that particular part of the tax code, and if the federal government isn't going to fix it on their side, then maybe here in the state of Connecticut, the state legislature can fix it, here at home. And that's why it's got this, people ask me all the time, why is it 19%? Why isn't it 5? Why isn't it 10? How about 20? Why 19? It's 19 because they're targeting the difference between.
Well, yeah, I guess it should be 19.6 really.
Yeah.
to-
Right.
Because you're talking a long-term capital gain rate of 20%, and I think that that's we've looked into this issue. We have some content on the carried interest, so-called loophole. There's really no loophole. It's just called long-term capital gains.
Correct.
And so you can't really go and change it in any way without changing long-term capital gains treatment. If you did that, you would be voted out of office next time around, no matter who you are, because the people with long-term capital gains are your senior citizens and they know how to vote. And all your donor class is also long-term capital gains. So if you wanted to make sure you would never be in office, try to do something to fiddle with that long-term capital gains. That's what the fund managers, that's what they have. It is a long-term capital gain. That's what they're doing. So to try to claim that it's something else, the code can't really work like that. And I think it'd be applied rather sloppily if they did. I think if they did try to impose this, it would hit investors.
Well, I think it would, in this sense, again, they were targeting performance fees, but the language that they used for the bill was so broad. If you look at the language, it was any income derived from investment management. And so that could mean all the lawyers that have a fund management practice, all of the accounting firms that have practice groups that provide services to this particular industry. It's any income derived from investment management. So it's not just hedge funds. In fact, it would be any
right.
registered investment advisor. It's their
y-
income as well.
The other thing too, some gains are short term. You are paying that ordinary, so you
right.
could be paying your ordinary rates, and then have a 19% on top of it too.
All
And
right.
now you're really getting up there in your effective tax rate.
So then let me be devil's advocate, because
Yep.
there's people watching that are saying, well, what's the detriment? We charge them higher taxes, Connecticut wins, we get a ton more money. How is this a detriment and not a benefit to Connecticut's financial situation?
If this particular tax was allowed to make it into law, I think what you would see is an acceleration of a process that's already begun, where the top earners, and remember, in this particular industry, most of the firms are set up as LLCs and partnerships. So we're talking about partnership taxation with flow-through taxation to your personal income taxes. And I think if a bill like this were allowed to be passed into law, you would start to see an exodus of people from this industry out of the state of Connecticut. And again, remember, Connecticut is right now the number 3 or number 2 global center of this industry. There is a significant industry cluster that is formed here in Connecticut. And I think you would start to see a slow bleed of that industry, out of this state to places like New Hampshire and Florida. And I will tell you that Florida is being very aggressive. You've probably seen some of the work that Governor Scott has done to try to recruit businesses specifically from Connecticut to move to Florida.
They were very nice to me. Yeah, they're very excited.
I'm sure they are.
They did the outreach. Yeah, they really do have their stuff together down there.
Yeah, and they've got a good story to tell, if you take the hurricanes out of the equation. And they've been very aggressive. They send representatives from the Palm Beach Business Development Association, the Miami-Dade business development groups are fixtures at hedge fund industry conferences these days, which stands in stark contrast to, you'll never see a booth from the Connecticut Department of Economic Development at any of these industry conferences. We should be. We should be looking for ways to incent and promote what is already a significant industry cluster, and not seeking creative ways to try to tax this group with the potential of having them all move out of state.
It does sort of reek of a little greed to me that here's these people are paying in Connecticut. The richest people are paying such a disproportionate share of the income tax in Fairfield County, and those protesters. It's like maybe you should have been given a thank you to these people. Instead of protesting them, who else is going to be paying your pension? Without this Fairfield, without the incredible wealth from Fairfield County and the rest of the state, there's nothing to tax. So you could raise your tax rate to 60%. You're just going to get less and less. And I think there are people starting to learn the lesson that every tax increase that we're seeing in the state of Connecticut, the revenue isn't increasing. You've maxed out how much you could possibly tax without people leaving. And there's a lot of businesses I talk to in this state that say, well, as soon as we could afford to move out of the state, we will.
Yes, yep. Now, Bruce, you had sent me particular information. I don't know if you want to name names. It was an article of the hedge fund billionaire from New Jersey.
Yes, David Tepper from Appaloosa.
He moved to Florida. He had been in New Jersey for 20 years, moved his headquarters down to Florida as well. He was the state's wealthiest resident. It's a pretty cool title. Estimated that it's going to cost New Jersey hundreds of millions of dollars just because one guy moved out of state. Again, wealthiest, but you can see how people making an exodus could harm us a lot.
That's right. And when you're talking about people, with that kind of wealth, just one or two of them moving has a material effect on the tax receipts, and that's why it's important that a bill like that does not get passed.
Yep.
Yeah, I mean, it's such a huge portion of the revenue that's not, the revenue the state collects is a fraction of what the federal government collects, and so that could pay for several towns' entire board of education budget for years.
Right.
That's what you're talking about. One person has that amount of impact. And so this really should be, the state should be having an outreach. And that's actually where, Connecticut was, before it had an income tax, was always saying, hey, New Yorkers, come on over to us. We have a favorable tax climate. And that changed with our temporary income tax that was passed in 1991 because it was temporary. As soon as the deficit was gone, it'd go away. Deficit hasn't gone away yet. So let me, it's just wherever you see this, where it just doesn't work. You can't tax your way out of fiscal mess like this. There has to be something on the other end. And this is the worst people in the world to target. If you wanted to make sure you saw lower revenue for the next foreseeable future, I think imposing a 19% surtax on hedge funds is probably the best way to do it. And for the people who are relying on their, if you're a state employee and you have a pension, if you're still one of the people on a pension, don't let this happen. This is going to put your financial situation in a bad place. Yep. Make sure you're saying, no, do not do this. Yep. So for middle class people, who are working for the state, this could really be a bad thing.
Yep. Now, Bruce, talking about the positive impact of hedge fund investors in Connecticut, I had asked you if you have any idea of the amount of revenue that has been generated by them 10, 20 years. You said nothing, you don't have anything concrete, but your group is working on trying to come up with something,
Correct.
A number?
That's right. We haven't quantified that number, the overall impact, but it's something that our trade association is working on actively right now. So hopefully the next time I come back to do a podcast like this, we'll have better data to share with you.
Yep. And so talk about how do they actually generate revenue besides paying taxes? Because there are other things that come out of these hedge funds.
Sure. I mean, I think one great example is, what we refer to as the multiplier effect. And a lot of that can be tied to the service industry that has sprouted up around the hedge fund community in Greenwich to provide services to that industry. There are accounting firms, there are law firms, there are fund administrative firms, the firms that crunch the numbers and calculate the NAVs. There are the people that help these firms to raise money, capital introductions firms. So there's a whole industry or service industry ecosystem that has sprouted up around Greenwich and Stamford to cater to this industry group. Many of those types of service firms are members of our association. Many of the firms that you saw that are actively helping us to underwrite the cost of our events, or that money is coming from the service side of the industry. And I'll tell you that several of our corporate sponsors have plans to grow their practice groups in the state of Connecticut just to cater to this industry group.
Wow. So
the industry is bigger. Well, I guess the point I'm trying to make is that the industry itself is bigger than just we talked about 400 funds, in the industry cluster in Connecticut. It's bigger than that. In fact, one of the largest fund administrative firms in the world and in this industry is SS&C, based up in Windsor, Connecticut. So they have a very large hedge fund practice group.
Now, you mentioned coming back for a second podcast, which I think the next topic we could do a whole podcast on. Something you told me that really surprised me was China and Japan, very envious of what we have here and are trying to replicate it.
Correct. In China specifically, they are trying to grow their domestic financial services industry, and a big part of that is to grow their asset management industry. They look to Greenwich, Connecticut as a model of how to build an industry cluster. And they look to people working in hedge funds and private equity funds as probably being the best and brightest minds in investment management and portfolio management. And they're fascinated by the fact that a town of only 60,000 people can become a global center of this industry. And so we have been entertaining wave after wave of delegations from cities like Beijing and Shanghai and Hangzhou. Last Friday, we had a delegation visit us from Shenzhen, and all of them have initiatives in place to try to build out a hedge fund and private equity fund cluster modeled on Greenwich, Connecticut. And in fact, I was visiting Hangzhou, China this past June, and took a tour of the Hangzhou Fund Town, and they call these places fund towns. And on the gates to the Hangzhou Fund Town, it says, "Welcome to the Greenwich of China."
Wow. Did you get a picture of that?
Absolutely.
Oh, I'd love to see that.
And so they're certainly looking to us as a model. And when they come to Greenwich, and they come and they meet me, and they meet people from the industry, they always want to meet the mayor and go to town hall. And one of their very first questions is, how did you do it?
You know, one simple answer.
How did you build out this
Well,
industry cluster, and what ideas can we take back to China? And I would love to be able to tell them that there were all of these incentive programs that the town and the state had put in place to try to attract and grow this industry, but it's really not like that here. And here we are talking about, you know, a surcharge tax that would do exactly the opposite
Right.
of what we should be doing, which is trying to incent and grow it.
Yeah, it's the envy of the world that some people want to kill. And, you know, I don't think I want those signs up in China to say we are the Miami of the world. We don't want that. And that's really, I think that the people, you know, the state that has the most to gain from this, you know, this tax is passed. Connecticut's not going to gain anything from this. Florida will be gaining tremendous. I think that's where most people would end up domiciling.
Yeah.
So, devil's advocate again, let me ask the question that I'm sure the protesters would like to ask is, why don't the rich just pay their fair share? I know the answer to that, but I'll let Bruce give his opinion.
In my humble opinion, I would ask you the question back. What does fair share mean, and who is going to be the person defining what that means? It usually means more than you're paying now. But I haven't seen a lot of empirical data on what's fair and what isn't fair. I understand that it's human nature that people don't like to see somebody that's making more than them. I get it. I kind of feel the same way.
But that's not exactly. But that's not exactly a virtue. That's actually not at all a virtue. It's the opposite of the virtue. And I did notice some of the people testifying in favor of the bill were from an organization called Millionaires for Fairness or something like that. They're claiming a group of 200 high net worth individuals who think that they should pay more in taxes. And you know that it is possible if you want to pay more in taxes, the U.S. Treasury does accept donations. And so I would just,
No kidding.
Oh yeah, they do. No, and this is always the thing. Warren Buffett's always
tip jar.
Warren
Don't
Buffett
fund
always
your IRA.
makes a big deal about I don't pay enough in taxes, and then I send them here's the link. Here's the link. They'll still accept it. They take it. They do. And you know, I've looked into this, and you know, how much have they collected through this, and not a lot. You know, so all these people always claiming for it. What they want is you to pay more. It's always you to pay more, and not necessarily them. And you know, I think that we do have things a little bit backwards. That we think about. You know, you start looking at farming rich people. Well, this is something of ours that we can take, as opposed to, well, what's the benefit that they're doing, and does this really make sense? Just because you're a majority of the people is all it takes. to pass something. And it's always the people who are richer who are the target. But yet, and this is what we know, is that if you have real wealth, you could avoid taxes. We can set that up for you. You know, there's great ways to avoid paying taxes. When
Legally.
We'll talk after the
Yeah,
podcast.
right. Legally, when you're really wealthy, there's great ways to do it. It's the people who are aspiring to become wealthy where there's very little you can do.
And I always like to put this sort of simple man perspective on it. You know, I think about, the rich are always trying to get out of ways to pay taxes. Let's say you're an average Joe and you win the lottery. What is the very first thing you think about? Ooh, do I want lump sum or how am I going to get taxed the least amount on this?
I need to call someone. Right.
And then after you decide what you might call an attorney or a tax lawyer, and you're then going to have a team to help you pay the least amount of taxes that you legally can. So if you're a billionaire, why can't you use a team that's at your disposal, as long as it's legal? I mean, that's obviously the underlying factor. But that's sort of how I think of it.
There's no one who volunteers to pay more. There really isn't. When it's actually their money on the line, they never want to do it. It's always somebody else who should be doing it.
Yep. So, Bruce, what's next? We just keep an eye on the bill and...
Yeah, I think we keep an eye on the bill. I've got a call from the Yankee Institute just yesterday asking for me to sign on to an open letter to Governor Malloy,
Nice.
asking him to take a serious look at passing a bipartisan budget that was put before him that does not include this particular bill. So I think that's next. And one thing I would just want to leave people with too is that when I think about the protests that took place last Thursday, and I think about the emotion that I saw and some of the anger, I find it very misplaced. I think there's a lot of misunderstanding about this particular industry. Are there highly compensated people that work in the hedge fund industry or in the broader financial services industry? Yes, certainly that's true. But I don't understand the anger directed at hedge funds as if the hedge fund community had something to do with the budget deficit that exists in the state of Connecticut. Nobody in the hedge fund industry did anything to you to create that budget deficit. Nobody in Fairfield County did anything to you.
And the reason why it isn't as large as it could be is because there's incredible income that's taxed every year by the state income tax.
Yep.
Right.
And they got, and I was looking at some of the reasons why the people who were testifying for the bill, I was looking at what they were saying, and like, well, we want to argue for progressive taxes where the rich pay more. I think you guys won that battle. I really do. It's so uneven. You can't tax them anymore. It's really and expect to get more.
Right. It's funny when you said misguided, all I could think of, Bruce, was I don't see anybody protesting like the NFL players when they're wicked rich. Nobody's mad at them for making all that money.
I think Paul McCartney and U2, they're on tour. I don't see any protesters protesting how much money they earn
make
for a concert.
Right.
And the other thing about hedge funds, they're private businesses. These are private businesses that were started by people who took a risk to start their own business. Right. Their clients weren't given to them. They had to go and scrap to get their clients. Their clients are usually very sophisticated, either very sophisticated and wealthy families or very sophisticated institutions that decide or not whether they want to invest with these people. And the fees that they agree to pay are negotiated between the fund manager and this sophisticated investor on the other side. So I don't see where it's anybody's business to question how much they charge in their fees. If they're charging too much, their clients will tell them. Their clients won't invest, or their clients will negotiate a lower fee. But if the best and brightest are able to negotiate a high fee for themselves and they end up performing, that's another thing that people forget in this equation. You don't get a performance fee or a carried interest fee unless you perform. Right? So if they're doing their job and they're making money for their clients and their clients are happy, they get their fees in a private business structure where the client relationship has been negotiated privately. I don't know what business that is of mine, yours, or anybody else's, and how anybody could be angry about that state of affairs. if you want to be angry about, a state of affairs in corporate America, I would direct your attention towards big publicly traded firms that maybe got a bailout from the government in 2008, 2009. That would be a better place to direct your anger, not at small private businesses.
Yeah.
All
There
right,
you go.
so-
And I think, and just one more thing, I would
Yeah.
just add that, unfortunately, I don't think a lot of these people have ever been exposed to one-on-one with a fund manager. And I think that's one of the things. It's too bad, because if you are, whenever you talk to a fund manager, it is so impressive. You realize, number one, these guys are hustling incredibly. Their level of knowledge and the level of, you don't get intimidated, or if you do, you hide it. You just keep going. You take no all the time. You come up with big ideas, and these are the people who are operating at the top level, and it's just wonderful to watch them work. I would never want to see them leave. I mean, it would just really be a disaster to how much they add to our state. And I really just want to see them rewarded for all the risk and the hard work that they're doing. It's really incredible, and maybe that's something maybe that's something you could do, is do a little outreach so people understand. Like, look, here's really who's part of our group. These people are amazing, who provide value to their clients, and when that value is provided to the clients, that also flows around the state too.
Mm-hmm.
Absolutely. And I think we probably should do a better job of educating the public
Yes.
as to what this industry is all about, and talking about exactly that. Some of these people that work, many of the people that work in this industry are also very generous personally and very
Oh, yeah.
philanthropic.
So if somebody watching, listening wants information about the association, what is the website?
The website is www.cthedge.org.
Okay, awesome. And if they want, they can reach out to you. There's a contact you there on the
Absolutely.
website?
Yep.
Okay,
Yep.
excellent.
Please do.
Thank you so much for your time today. We would definitely love to have you back. And we're going to continue to monitor the bill as well. So if we see any updates, if anything changes, we'll make sure we do an updated video as well. So we want to thank you so much for watching today. You can comment below. You can like. If you have questions, you're confused about hedge funds, it's worth a conversation to make sure you're educated about what this bill means and what it could do to Connecticut. Subscribe to our channel. You'll get more awesome tax updates about hedge funds and all else in the tax world. Thanks so much for watching.